All right, folks, buckle up. The market's at a pivotal level, and things are getting interesting. Are we about to see a breakout, or is this a false dawn before another downer? I'm here to break it all down for you. No fluff, just straight facts. The Dow Jones futures are sending mixed signals, and smart investors need to be ready to react. Get ready to dive deep into the heart of the market and uncover what's really going on. Don't go anywhere, because the next few minutes could change your portfolio forever. We are talking about real money here, so pay close attention. Let's start with the Dow Jones futures. They're currently dancing around a critical resistance level. A break above this level could signal a strong bullish trend, pushing the market to new highs. However, failure to break through could mean a pullback, potentially erasing recent gains. We're seeing a tug-of-war between the bulls and the bears, and the outcome is far from certain. The key is to watch the volume and momentum. Are buyers stepping up, or are sellers lurking in the shadows, ready to pounce? We'll be monitoring this closely throughout the video. Remember, knowledge is power, especially in a volatile market like this. Don't let fear or greed drive your decisions. Stay informed, stay rational, and stay ahead of the curve. Now, let's zoom in on Amazon. This AI titan has been showing impressive strength lately, fueled by its dominance in cloud computing and e-commerce. The stock is currently trading near a potential buy point, presenting a tempting opportunity for investors. But before you jump in, consider the risks. Amazon's valuation is already high, and any negative news could trigger a sell-off. We need to analyze the fundamentals and technicals to determine if this is a smart entry point. Are Amazon's earnings growing fast enough to justify its price? Is the stock showing signs of technical strength? We'll answer these questions and more in the coming minutes. Remember, investing in individual stocks carries risk, so always do your own research before making any decisions. Next up is Broadcom, another AI powerhouse. This company is a major player in semiconductors, supplying chips for everything from smartphones to data centers. Broadcom is also nearing a potential buy point, making it an attractive investment option. However, like Amazon, Broadcom faces its own set of challenges. The semiconductor industry is highly cyclical, and a slowdown in demand could hurt Broadcom's earnings. We need to assess the industry outlook and Broadcom's competitive position to determine if this is a worthwhile investment. Is Broadcom innovating fast enough to stay ahead of its rivals? Is the company's management team executing its strategy effectively? We'll delve into these factors to help you make an informed decision. The AI race is heating up, and Broadcom is right in the thick of it, but that doesn't guarantee success. Speaking of the AI race, let's talk about NVIDIA. This company is rapidly clearing key levels as its pricing power is seen dominating the AI server market. The question is the stock a buy now? NVIDIA's GPUs are the engines that power many AI applications, giving the company a significant competitive advantage. However, NVIDIA's stock has already soared in recent months, raising concerns about valuation. We need to determine if NVIDIA's growth prospects justify its high price tag. Is NVIDIA's dominance in the AI server market sustainable? Are there any potential competitors that could challenge its position? We'll explore these questions to help you assess the risk and reward of investing in NVIDIA. Remember, past performance is not indicative of future results, so don't let the hype cloud your judgment. Now, let's get down to the nitty-gritty and talk about fundamental analysis. This involves examining a company's financial statements to assess its intrinsic value. We'll be looking at key metrics like revenue growth, profit margins, and debt levels to determine if Amazon, Broadcom, and NVIDIA are financially sound. A strong balance sheet is essential for long-term success, especially in a volatile market. We'll also be considering factors like management quality, competitive landscape, and industry trends. The goal is to separate the hype from the reality and identify companies with genuine long-term potential. Remember, investing is a marathon, not a sprint, so focus on building a portfolio of high-quality companies that can withstand the test of time. Don't chase short-term gains at the expense of long-term value. In addition to fundamental analysis, we'll also be using technical indicators to identify potential buy and sell signals. These indicators use historical price and volume data to predict future price movements. We'll be looking at things like moving averages, relative strength index, RSI, and MACD to determine if Amazon, Broadcom, and NVIDIA are overbought or oversold. Technical analysis can be a valuable tool for timing your entries and exits, but it's important to remember that it's not foolproof. No indicator is 100% accurate, so always use technical analysis in conjunction with fundamental analysis. Don't rely solely on charts and graphs to make your investment decisions. A well-rounded approach is always the best approach. So, what exactly constitutes a buy point? A buy point is a price level where a stock is likely to break out and move higher. It's typically identified using technical analysis, looking for patterns like cup and handle formations, flat bases, and double bottoms. The key is to wait for confirmation before entering a trade. Don't jump in prematurely just because a stock is nearing a potential buy point. Wait for the stock to actually break out above the buy point on strong volume. This confirms that buyers are in control and that the stock is likely to continue moving higher. Remember, patience is a virtue when it comes to investing. Don't let FOMO, fear of missing out, drive you to make impulsive decisions. Wait for the right opportunity and then strike with confidence. Now, let's talk about risk management. This is arguably the most important aspect of investing. No matter how promising a stock looks, there's always a risk that it could go down. That's why it's crucial to have a plan in place to protect your capital. One of the most effective risk management techniques is to use stop-loss orders. A stop-loss order is an order to sell a stock if it falls below a certain price. This limits your potential losses if the stock goes against you. Another important risk management strategy is to diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across different stocks, sectors, and asset classes. This reduces your overall risk and increases your chances of achieving long-term success. Remember, preserving your capital is just as important as generating returns. Don't take unnecessary risks in the pursuit of quick profits. We have to consider the macroeconomic environment. Interest rates play a huge role in stock market valuations. Higher interest rates can make it more expensive for companies to borrow money, which can slow down economic growth and hurt corporate earnings. The Federal Reserve's monetary policy decisions have a significant impact on the stock market, so it's important to stay informed about their plans. Are interest rates likely to rise, fall, or remain stable? This will have a direct impact on the attractiveness of stocks relative to other asset classes like bonds. We'll be monitoring the Fed's actions closely and analyzing their potential impact on the market. Remember, the stock market doesn't exist in a vacuum. It's influenced by a complex interplay of economic, political, and social factors. A holistic understanding of these factors is essential for making informed investment decisions. Don't just focus on individual stocks. Pay attention to the big picture. Beyond interest rates, the overall economic outlook is also crucial. Is the economy growing, slowing down, or heading for a recession? This will have a direct impact on corporate earnings and stock market performance. We'll be looking at key economic indicators like GDP growth, unemployment rate, and inflation to assess the health of the economy. A strong economy typically supports higher stock prices, while a weak economy can lead to market declines. We'll also be considering factors like consumer confidence, business investment, and global trade. The goal is to get a comprehensive understanding of the economic landscape and its potential impact on the stock market. Remember, economic cycles are a natural part of capitalism. Periods of growth are inevitably followed by periods of contraction. Being prepared for these cycles is essential for long-term investment success. Don't get caught off guard by unexpected economic events. Stay informed, stay vigilant, and stay ahead of the curve. Never underestimate the power of competition. In the tech world, things can change in a heartbeat. New players emerge, existing players innovate, and the competitive landscape is constantly evolving. We need to analyze the competitive positions of Amazon, Broadcom, and NVIDIA to assess their long-term prospects. Who are their main rivals? What are their strengths and weaknesses? Are they gaining or losing market share? This analysis will help us determine if these companies can maintain their competitive advantages and continue to grow their earnings. Remember, a company's competitive moat is crucial for long-term success. A wide moat protects a company from its rivals and allows it to generate sustainable profits. Don't invest in companies that are easily disrupted by competitors. Looking ahead, what are the key growth drivers for Amazon, Broadcom, and NVIDIA? For Amazon, it's likely to be continued growth in cloud computing, e-commerce, and advertising. For Broadcom, it's the increasing demand for semiconductors in various industries, including AI, automotive, and networking. For NVIDIA, it's the explosive growth of the AI server market and its dominance in GPUs. We need to assess the sustainability of these growth drivers and their potential to generate long-term value. Are these companies investing in the right areas? Are they innovating fast enough to stay ahead of the curve? We'll be analyzing their R&D spending, product development pipelines, and strategic partnerships to answer these questions. Remember, investing in growth companies requires a long-term perspective. Don't expect overnight riches. Focus on companies with strong growth potential and a proven track record of execution. Earnings reports are a crucial window into a company's performance. They provide valuable information about revenue growth, profitability, and future outlook. We need to pay close attention to the earnings reports of Amazon, Broadcom, and NVIDIA to assess their financial health and growth prospects. Did they beat or miss expectations? What was their guidance for the next quarter? What are the key takeaways from the earnings call? This information will help us determine if the stocks are fairly valued or overvalued. Remember, earnings reports can be volatile events. Stock prices can swing wildly in response to the news, so be prepared for some turbulence. Don't make impulsive decisions based on short-term price movements. Focus on the long-term trends and the underlying fundamentals of the business. Let's not forget about AppLovin. This stock is flying toward a potential breakout, and its earnings are just around the corner. AppLovin is a mobile marketing and app development company that has been showing impressive growth lately. The stock is currently trading near a key resistance level, and a break above this level could signal a strong bullish trend. We need to analyze AppLovin's business model, competitive position, and growth prospects to determine if this is a worthwhile investment. Is AppLovin's technology innovative and effective? Is the company's management team executing its strategy effectively? We'll be looking at these factors to help you make an informed decision. Remember, small-cap stocks like AppLovin can be more volatile than large-cap stocks, so be prepared for some ups and downs. But the potential rewards can also be greater. Don't be afraid to take a chance on promising growth companies, but always manage your risk carefully. Now, let's play devil's advocate for a minute. What if the market's rally is just a head fake? What if the economy is about to enter a recession? What if Amazon, Broadcom, and NVIDIA are overvalued? It's important to consider the bearish arguments as well as the bullish ones. No one has a crystal ball, and the future is always uncertain. By considering different scenarios, you can be better prepared for any outcome. Remember, investing is a game of probabilities, not certainties. You can't eliminate risk entirely, but you can manage it effectively by being aware of the potential downsides. Don't get caught up in the hype and ignore the warning signs. A healthy dose of skepticism is always a good thing when it comes to investing. While we're focusing on AI stocks today, it's important to remember that there are other investment options out there. Bonds, real estate, commodities, and cryptocurrencies can all play a role in a well-diversified portfolio. Don't limit yourself to just one asset class. Explore different options and find what works best for your risk tolerance and investment goals. Remember, diversification is key to reducing risk and increasing your chances of achieving long-term success. Don't put all your eggs in one basket. Spread your investments across different asset classes and geographical regions. This will help you weather any storm and achieve your financial goals. Don't be afraid to think outside the box and explore unconventional investment strategies. Ultimately, investing is a long-term game. Don't get caught up in the short-term noise and volatility. Focus on building a portfolio of high-quality companies that can generate sustainable growth over the long haul. Be patient, disciplined, and stay the course. Remember, Rome wasn't built in a day, and neither is a successful investment portfolio. It takes time, effort, and a long-term perspective. Don't let emotions like fear and greed drive your decisions. Stay rational, stay informed, and stay focused on your goals. By adopting a long-term perspective, you can increase your chances of achieving financial freedom and building a secure future for yourself and your family. Don't let short-term setbacks derail your long-term plans. So, there you have it. A comprehensive analysis of the Dow Jones Futures, Amazon, Broadcom, NVIDIA, and the overall market outlook. Remember, the stock market is a complex and ever-changing landscape. It's important to stay informed, do your own research, and manage your risk carefully. I hope this video has provided you with some valuable insights and helped you make more informed investment decisions. Thank you for watching, and I'll see you in the next video. Don't forget to like, subscribe, and share this video with your friends and family. Let's build a community of informed and successful investors together. And most importantly, leave your thoughts and questions in the comments below. I'm always eager to hear from you and learn from your experiences. Let's continue the conversation and help each other navigate the exciting world of investing.